Great. Well, good afternoon. I'm sure that we'll get a few more colleagues trickling in, but let's try and start without too much of a delay. So welcome to the briefing on the industry outlook. I'm assuming everyone has received the full documentation via email. It's also up on our website, but I would encourage you to have a look through that. We are privileged to have Owens Thomsen, my colleague, who's also the Senior Vice President for Sustainability, as well as our Chief Economist and the author of the Outlook, here with us to take us through a few slides, going a bit further in depth on what you might have seen in the discussion this morning. That'll take about 5 minutes, 10 minutes or so, and then we'll throw it open to questions. So without further ado, Marie, the floor is yours.
Okay, breakneck speed. Now, thanks for being here, everybody, and lovely to see so many familiar faces and the new ones as well. I appreciate you all for being here. Thank you. So, as an economist, I can't stop from starting with GDP, obviously. And we had this very unusual period of stability at around 3% GDP growth, and we would have thought that that would have continued into the future had we not had all of this trade policy uncertainty. So now we've revised down our GDP forecast from 3 to 2.5 for the global economy this year. And we think that the US economy in particular is going to lose a full percentage point. So revised down from 2.5 to 1.5 regarding the US. And as you can see, the intimate correlation between GDP and RPKs, our revenue passenger kilometers, are intimately related with GDP. So less GDP growth is fundamentally not helpful for our industry as well as for the global economy, obviously. But it's useful and helpful, on the other hand, that we have lower oil prices, because lower oil prices help the global economy, promotes activity. Given how pervasive the use is of fossil fuels, over 80% of global energy consumption is in the form of fossil fuels, so if it gets cheaper, everybody benefits. And now how much airlines benefit depends on this crack spread, the spread between the price of Brent and jet fuel. Currently it's around $20, which is sort of the high end of the historical range, but still so much better than the crazy period we had in 22-23 when the crack spread was $60 a barrel. So I just want you to retain the fact that jet fuel prices don't always benefit to the full extent of the decline in crude oil prices. But anyway, today it's helpful for our industry for sure. And we think that in spite of all the headwinds and uncertainty around trade policy and increased costs almost anywhere except for jet fuel, we still think that our industry will grow the passenger traffic by 5.8% this year. And here you can see where most of the growth comes from, which is obviously Asia Pacific, and then the other regions. Contribution to this 5.8% growth rate is what you see here. So it's not surprising that the more mature markets, arguably, certainly North America, is growing by less, it's encouraging after all to see that Africa is growing by 8%, and we would certainly hope that that could accelerate and continue into the future. So here we can see again how the traffic is distributed across the regions and also between domestic and international. So, and the Eastern Central Europe countries are, are not. Let me see what we're seeing here. I'm drawing a complete brain freeze. Help me. What is it that I'm showing actually? A complete brain freeze on...
So those are traffic by sub-region, and on the right-hand side you have domestic, international, year-on-year increase by areas like Northeast Asia, Western Europe,
Right, exactly. So the scale, you see the scale goes up to 40% obviously on the left-hand side, and it only goes up to 10% on the right-hand side, and that's how we can see all of these other sub-regions which we otherwise wouldn't see. Sorry, I think I'll hopefully sleep better in coming nights. Sorry for my confusion. But again, it's very noticeable in all of this that it's Central Asia and Asian related markets that are growing the most, making the largest contribution to our growth. This was the first quarter of this year. And on the cargo side, you see the first quarter of 2025 in blue, and the whole year of 24 in red, and the whole year of 23 in yellow. So in 24 we had a very strong cargo year across the board, and obviously this first quarter is not necessarily telling us everything about what this year is going to look like, but it is starting out sort of a bit more modestly, and that is indeed what we would expect for the year as a whole. We're looking at an increase in cargo ton kilometers of 0.7%. So clearly cargo will be, we are strongly assuming, impacted by this trade policy uncertainty and some of the trade policy changes that have already occurred. Now, as if that wasn't bad enough, you know, even before we start talking about trade policy, we have these malfunctioning supply chains, and they are definitely capping capacity in our industry, and we think that they are also curtailing, you know, probably profits as well. It's a bit of a double-edged sword because we can't increase capacity, we also have the highest load factors that we've ever seen. 84% is the passenger load factor that we are expecting for this year. So that's amazing. And high load factors means, you know, higher yields per se. But it's sort of impossible to say exactly how that would have panned out if we had had unlimited access to capacity increases. But we think that we probably would have done at least a little bit better if we had received these airplanes. And here you can see that the situation is absolutely not improving, and it's even worsening when it comes to regional jets and turboprops. So nevertheless, in spite of all of those you know, pluses and minuses in the evolutions around us, we are looking for the industry to realize a profit of 36 billion this year. And that net, and that would equate to a 3.7% profit margin, which is both a little bit better than last year, and maybe sort of counterintuitive, you could think, if we are now facing all of these additional headwinds. But clearly it's in this interplay, you know, between lower fuel prices that helps the cost picture, but, you know, puts pressure on yields, and shame that we don't have the airplanes, but on the other hand we have these high load factors, and then continued demand. So in that sort of soup of conflicting impulses, we do believe that we still manage to eke out some better improvement, basically then on the back of efficiency gains and on the back of the lower fuel prices. And when you look at the profit per region, this is what it looks like. So the bars are in billions, and the little squiggles are the actual margins. So North America has high billions, but lower margins, and Africa obviously has the lowest of both. But margins do matter, and that is, of course, something that the industry always has struggled with, being able to produce enough margin. Now, in terms of what the where the revenue is generated, it is still mostly generated on the passenger side. Over 70% of our industry's revenue comes from the passenger side. The blue is cargo revenue, and it's hard to see, but it's still a couple of percentage points share higher than in 2019. So we're still up on 2019. And then the yellow is ancillary revenue, and this is indeed where most of the incremental growth is coming from, and that share has now risen to 15% of total airline revenue. Costs are increasing across the board. All the costs are up except fuel. So fuel is now 26% of total costs, and that is of course helpful for us. But employee costs, aircraft ownership costs, and all the other costs are up. So we're really lucky in this environment that fuel is down, because it is indeed, as we just said earlier, what incrementally helps us produce the profits that we're expecting for this year. And then, of course, structurally, this is a low margin industry, and the industry has always struggled with delivering, you know, the kinds of return on invested capital that most investors, certainly in financial markets, would be looking for. And our weighted average cost of capital is still high and rising in part because of the supply chain's inability to deliver aircraft. That pushes up leasing costs and the price of aircraft, of those aircraft that are still you know, potentially available on the market. So you can see that the weighted average cost of capital still exceeds the return on invested capital, in spite of the efficiency improvements that the industry has managed to deliver. And per passenger then, this gives us $7.2 net profit per passenger. It has a wide spread, as you can see, from $27.2 per passenger in the Middle East to a mere $1.3 per passenger in Africa. And this is sort of an alternative way of expressing the margin that the airlines in these regions operate with. So clearly you have a higher margin, you will get a higher per passenger profit, and that's really good, because we need higher margins in order for our industry to become more robust. I think we're an absolutely, amazingly, incredibly resilient industry. You can knock us on the head as many times as you want, and we will always be able to stand up. That is at least what history proves. But it would be so good if we could be a bit more robust, so we didn't have to fall over in the first place when people try to knock us on the head. So that, I think, remains the challenge. Our challenge, as we see it, is to promote airlines' financial and environmental sustainability. These two must go hand in hand, and we are doing everything that we can to improve that picture on both sides. Thank you very much.
Great, thank you, Marie. So with that, we'll throw the floor open to questions. Who wants to ask the first? Lewis in the front row.
Thank you. Lewis Harper from Airline Business. I know when we look at the overall industry profitability, it tends to be a small number of airlines that account for quite a big proportion of the overall profit. Do you look at what proportion of airlines are profitable overall and how that's trending historically? Is that something you look at?
Yeah, I don't have the percentage in my mind. I don't know if we could maybe provide that. But certainly the image I have in my mind, you know, is this curve where there's a tail that dips down into negative territory, and then there's a long line that hovers around zero, and then boom, there's the profitable airlines here at the other end. But clearly that whole sort of whatever we want to call it has shifted upwards after all, yeah, because we are eking out higher profits than we used to. And it is impressive that we've come back to where we are now compared to the loss of 140 billion in 2020, right? So that's a remarkable turnaround. But we're still struggling with this what I would call a uniquely skewed value chain, yeah, where the airlines sit in the middle of this value chain, and upstream there's only oligopolies, and they have outsized pricing power, and airlines can't really influence in price negotiations the price that they have to pay for aircraft and for landing at certain airports and, you know, all the other things. And then downstream, we have an equally, absolutely unique price transparency towards the customers, yeah, where customers can see all the prices at all the times. And, you know, I don't know any other industry where that's the case. So, so there's very little margin for airlines to influence their immediate value chain, and therefore airlines will have to look at other things, you know, to try to increase their margins, and that, you know, might mean going outside of your core activities, yeah. So that's sort of a big ask, yeah. But we do fantasize, or I don't know if I should say we. I fantasize, I admit, yeah. I fantasize about airlines being able to insource their fuel supply, you know. In today's world, I think that would be an absolute magic wand, yeah. And some airlines are indeed doing that to a certain extent, yeah. Self-supplying SAF, sustainable aviation fuel, and that's fantastic. But they are indeed, as you allude to, you know, the happy few with the stronger balance sheets that can, you know, afford to take to engage in those types of adventures.
Right, maybe we'll go to this side of the room, in the third row.
Hi, Iteke here, Daily Telegraph, the Netherlands. Why is it so difficult to make more profits?
Yeah, I think I answered that question partially, you know, because, you know, you're a company and you want to make more profit. Yeah, you either have to sell more at a higher margin, or your costs have to decline somehow, and that's where, you know, for airlines they're very curtailed on both sides, right? So we can't really influence Airbus and Boeing so much on how much they're going to charge for their aircraft, and we all compete on price towards our customers. It's very hard to develop niche offerings in airlines, yeah. Has been, at least, you know, maybe this can still happen. But so then, you know, airlines would have to think about what else can we do that we could possibly make money on, yeah? And they could insource their fuel supply, or they could, you know, maybe offer financial services, right? Or, you know, yeah. But they would take airlines outside of their core business. The core business is, let's face it, you know, aviation is a uniquely capital-intensive and complex endeavor, and that's I think what makes it uniquely difficult for airlines to make money, and particularly where the airlines are sitting in this value chain, because there's also some implicit message here about the rest of the value chain, all of whom make more money than airlines.
Maybe Robert, second row.
Robbie Silk from Travel Weekly in the U.S. Do you see a world, if indeed we're going into a period where tariffs will, over the medium or longer term, be, and trade barriers be higher and more than they have been in recent last several decades? Do you see that as a long-term depressor of demand?
Yeah, you have to. Yeah, tariffs are a tax, and anything that you tax will tend to shrink. Yeah, so that's sort of the lay of the land. Now, we are helped though by a number of factors. Yeah, we're helped by the fact that manufacturing weighs so much less in the economies than it used to. So in the US it's maybe 10% manufacturing, right, in the economy. In the global economy it's like 46% manufacturing, yeah? So the majority is services. And as long as we don't try to put tariffs on services, that's a huge protector. This services buffer, you know, is a buoy against the negative impact of tariffs. So that's a really positive thing, as long as nobody tries to put tariffs on services. And then of course, you know, what's going to be exempt and what is not going to be exempt and so on. Obviously, we certainly, you know, argue very loudly and strongly in favor of not having any tariffs on the aircraft parts or engines and engine parts. We don't want any part of that supply chain to be tariffed, yeah? And it's like, you know, any aircraft uses maybe up to 800 different suppliers from all over the world, yeah? So you start putting tariffs on this and the whole system breaks apart, yeah? And, you know, these are like global arteries. I tried to use that analogy earlier today, that, you know, we all understand that if we have a problem with our arteries, we all understand intuitively that that will affect all of our organs and, you know, and our overall performance. And it's the same when you mess with these supply chains and the global trading system. So the good thing, as we said, is that we now have, you know, such a bigger weight of services in the global economy. That's a protector. But the bad thing, so to speak, is that we're so interdependent on the supply chains that exacerbates any issues that we impose upon this trading system. So the net, I believe, is still negative, yeah, from this type of inward-looking, self-supply, produce locally. That's a net negative economic policy.
Okay, thank you. We had a question here in the front row. Okay.
Hi, I'm Garima from India Outbound, and my question is, how do airlines anticipate sustainability investments that will affect their competitive positioning and ability to capture market share in decarbonizing industry?
Right, how are airlines going to decarbonize, essentially?
Yeah.
Yeah, excellent question. And we firmly believe that it has to rely to a very high extent on SAF production, sustainable aviation fuel. So, you know, the question for everybody in the world is like, how can we replace the fossil fuel that we all use with some other kind of fuel? And then it depends on who you are, what that other kind of fuel is. For airlines, it has to be a liquid fuel until such time that we can propulse airplanes with hydrogen or electricity or some other form of propulsion. But as long as we're flying with jet engines, we need a liquid fuel. Yeah. And the way to make liquid fuels without emitting as many CO2 emissions as when we use fossil fuel is this sustainable aviation fuel. So we think that we need like 63% or so of our total decarbonization effort on the 2050 horizon will have to come from these sustainable aviation fuels. And here the weird thing is that, you know, the technology exists, we all know how to do it. The money that we need to do it is comparable to the money that the world, you know, plowed into solar and wind. And we don't need to change our infrastructure. We call these drop-in fuels, yeah, because we can just drop them into the same fuel infrastructure. We don't need to rebuild anything, and we can just pipe this fuel into the aircraft, yeah? So we know how to do all of this, and yet we're not getting the fuel. Now, that is absolutely infuriating for us, yeah? And I think, you know, as in so many instances when it comes to air transportation, we need the intervention of the policymakers. So we need the policymakers to help skew the investment proposition in favor of renewable fuels in general and in favor of sustainable aviation fuel in particular. As long as the regulator still continues to favor the oil producers, we will not be able to decarbonize at the speed that we wish to.
Okay, thank you. We are running a little short on time, so if I can ask people to do short questions, short answers, we'll get through more.
You can always ask.
We shall try.
I shall try.
We'll take one over here, and then we'll slowly work our way back to that side of the room.
Ian Taylor, Travel Weekly in London. The panel you were on just before this was marked by uncertainty, with your fellow panellists basically not able to agree on what the consequences of the current situation are. The one point of certainty was yours, that air traffic would grow this year. But I wonder if that is a certainty, given, for example, that Trump has been close to sparking a financial meltdown once or twice already this year. So have you assumed in your forecast that the Trump administration doesn't do anything more remarkable than it has already done?
Yeah, I mean, that is sort of the assumption, yeah. And, you know, what's the credibility of this assumption? We can of course, debate that, but, you know, in our minds, it's still the higher probability that it will end somewhere around the numbers that we're presenting than that we will have. You know, we are obviously not predicting a recessionary scenario, yeah? We're predicting 2.5% global GDP growth rate. It's 0.5 percentage point below the long-term average global GDP growth rate. So that's obviously a cost to humanity, but it's still 2.5%. Yeah. So even in the US, yeah, where we're predicting 1.5 instead of 2.5, yeah. So that's really too bad for the Americans, but it's still 1.5, yeah. So we are not predicting a recession, and we are not predicting a recession in part because of the oversupply of oil, which makes the oil price lower, so that's helpful for everybody. And in part, as we said, because of the high share of services, which mitigates some of the negative effects of tariffs, and in part because some of the manufactured goods upon which tariffs are being imposed, are exempt from those tariffs. Yeah. So all in all, this mitigates the catastrophe that would have occurred if we had this type of scenario in the world economy the way it looked in the 1970s, for instance, where yeah, I can stop there. Try not to give such long answers.
Yes, so we'll go to Dina. We can get a mic up there.
Hi, Dina Kamel from the National Abu Dhabi. So one of the risks to the outlook that are in the industry report is the continuation or deepening of conflicts. And I want to ask you about the Middle East, particularly the Israel-Gaza war. That's showing no signs of abatement. And I wonder how heavily does that weigh on the outlook for Middle East carriers going forward, particularly the ones that are surrounding that conflict zone. And just a very quick second question. You mentioned lower oil prices and how that's reducing the cost of the airlines, but in oil exporting economies like the GCC, how much of a difficulty does that pose for airlines in that area?
Yeah, okay, so the first question is like, how bad is it that we have conflicts? That is obviously, I would say that the world's most growth positive policy possible is peace. Yeah. So clearly any form of conflict takes away from that and produces to some degree inferior economic outcomes and inferior welfare and so on for the populations. And it it has all kinds of perverse effects, as our industry is uniquely sensitive to fragmentation, yeah? And when I say fragmentation, I mean any particular place doing things their own way in disregard of all the other places. So as soon as we have that type of fragmentation, which comes naturally with conflict, we impair the whole global air transportation network. And the negative effects are spread across the globe, and not only on the immediate region affected by the conflict. And then, of course, you get associated questions such as what happens in the airspace and who can use the airspace and so on. So today we have less available airspace than we used to have, and also this airspace cannot be used on equal terms by all airlines. So we get a skewed competitive environment, and that's obviously not what we would like to see. So all of this is essentially negative. The only sort of temporary positive, if I can put it like that, is that shipping has been more damaged by upset in these shipping lanes, and that has eked out a comparative advantage for air cargo, but that seems to be dissipating at the moment. So the comparative advantage we had over maritime fees is disappearing. Now, of course, the lower oil price is going to mean lower profits for all the oil producers. And this too has, pros and cons across the globe depending on your point of view. So it will mean less money for Russia, for instance. That if you're Ukrainian, you would probably think that that's good news. But for the world economy as a whole, the oil producers are a minority. So as much as we regret the pain that is inflicted upon them from the lower fiscal revenues and so on, they are still a minority, and that's why I can still make this bold assertion that lower oil prices are a net positive for the global economy.
Okay, take a question up there. Okay, we'll go you, and then a few rows up after.
Manju from the Times of India. This is with reference to your last slide, dollars per passenger. It's understandable that the Middle Eastern airlines are topping the list, but why are they earning so much more than the rest of the world? I mean, is it because the proportion of long-haul operations are much higher, so the quantum yield per passenger is more, or is it because of fuel costs or something such?
I mean, they don't have the lowest fuel costs necessarily in the world, but they're towards the lower end. So they are helped by, relatively speaking, somewhat lower fuel costs than average, put it that way. And African airlines are at the opposite end of the spectrum. They pay more on average for fuel in Africa than other airlines. So for sure, that's one factor. And then, it's sort of not my role to comment on airlines' business models and so on, but I think that there has to be some kind of message in terms of how the region accommodates the activity, in a regulatory manner as well, right? That this is a region, along with India, I would say, two regions that have, on the whole, understood that air transportation is a growth multiplier. We have a share of GDP growth, that's fine, like any industry, but I would argue that we have a greater multiplier effect on other industries than most other industries. So we're a lever for economic development. We're a tool for countries that want to deliver more welfare and more growth for their populations. And maybe some of that is expressed in these results.
Okay, we'll take a question a little further up. Thank you.
Afternoon. Leila Ibrahim from News 24 Business in South Africa. I wanted to just maybe ask you if you could please expand, obviously, on African growth. We know that Africa, like you said, is dealing with high operating costs, high ticket prices due to high tax and all of that. And I know that in the presentation, where I'm from, so Southern Africa, passenger numbers have actually decreased in the first quarter in 2025. What would you say are the main challenges facing the African aviation industry, particularly in Southern Africa?
So I mean, definitely, I think my heart bleeds for Africa. Africa is stuck with 2% of global air transportation since I don't know how many years. Yeah, it's been stuck at 2% since forever, and it really doesn't move, which is, you know, incredible that this doesn't move given the size of the continent and the you know, the dynamic and growing population and all of these things. You know, it should be a place where air transportation grows, right? And no, so I think it's an expression here of sort of the opposite of what one might say about the Middle East, yeah? It's an illustration of the opposite, yeah? It's an illustration of how bad it can get when you are completely fragmented, yeah? When you fail to harmonize rules and regulations and so on across the continent, well, you end up with no air transportation or very little of it, right? And it's still true that Africa trades more and has better air connectivity with other continents than it does within Africa, because of the, you know, the connectivity is less fragmented internationally than this inter-African fragmentation, which is so regrettable. And it's so frustrating too to know that Africa has the world's largest free trade area, yeah, and still, you know, trades only to some 14% or so with itself, whereas the European Union, which of course has many years of advance on the African trade union, but nevertheless the Europeans trade, you know, 75% with themselves. So that's what we would love to see in Africa, but it would take, again, you know, a lot of people overcoming reticences to collaboration and some serious harmonizations of rules and regulations, and it's shameful that that is not a priority today. And finally, sorry about this, you know, short answer promise. That was obviously fake news, but yeah, it has to be said, yeah, that the energy transition is like, after peace, I would say that the energy transition holds out the best hope for improved growth and living standards for the world population, yeah? Because with the energy transition, we can develop and restore soil health. We can develop agricultural industries. We can develop energy industries. We can improve access to energy to any population. And, you know, there's just nothing else on the economic policy horizon that is that effective. So perhaps the main block is, of course, that African nations have to overcome is that we understand that they have very weak, of course, taxation bases. And the temptation, therefore, must be strong to tax anything that moves. But by taxing, disproportionately taxing airlines and air transportation, these same countries are disproportionately harming their own potential for growth.
Yeah, and I think also the visa issue still remains very important in Africa too. Something like 72% of travel in Africa still requires visas, which is a deterrent.
Yeah, why make it hard if you can make it easy? Would be the recommendation.
Other questions? We have about 3 minutes, so we will try and maybe do 2 questions.
Okay.
If we move super quickly.
Okay.
So we'll do 1 question here and 1 question with the gentleman in the back who's been very patient.
Hi, I'm waiting from the Singapore media. And just a quick question, you know, the travel airfare is actually 40% of 2014 levels. So how long can the consumers expect such on the lower end of the airfares to last? And are we expecting an increase maybe from next year onwards?
Yeah, so, you know, I think the first thing that everybody needs to realize is that airfares have, you know, decreased on average every year since air transportation was born. Yeah, so this is an industry that has delivered lower and lower airfares for everybody, and there are more people flying now than ever before. So I think that is the fundamental trend. Now, any given period in the global economy can, of course, momentarily take us away from that trend. And for sure, you know, there are many reasons to think that maybe now would be such a time when that might be the case. Yeah, and fundamentally, it's always a question of supply and demand, and that is, now we do have constrained supply. Yeah, how much will that allow airlines to capitalize on the lack of supply and push prices higher? Maybe, yeah. But then on the other hand, prices will also go down because fuel is cheaper. So it's a conundrum, your question, yeah. But let's, I think in this context, focus on the technological advancements and the energy efficiencies and the technological efficiencies and operational efficiencies that the industry continues to deliver, and assume that prices will continue to fall in the future. And if we manage to, successfully bring about the energy transition for everybody, then that would certainly be the case.
Okay, and we'll take the last question at the top of the room.
Thank you. Marcin Walków from Money.pl Poland. I would like to ask about the Donald Trump effect and tariffs on your economic outlook and the decrease in the forecast. Could you say a little bit more detailed what was the direct impact of Trump and tariffs on the performance of airlines? Was it mostly the cargo or also the passenger side?
Yeah, definitely mostly cargo. Yeah, and one very important isolated occurrence was, of course, the removal of this de minimis exemption. Yeah, where goods could be shipped into the U.S. free of customs procedures and tariffs if that good was worth less than $800. So this has been something that has very much supported the e-commerce trade, and lots of trade then therefore from Asia to the US that we think is going to be severely impacted by the removal of this exemption. But then there's still a question, as to how can those Asian companies maybe trade differently, and to what extent can they compensate for the loss of the US market with an increase in other markets. So, there are always multiple layer effects, So, but, on the first layer of impact, that's a very big negative on the US-Asia cargo lane.
And with that, we'll bring this press briefing to a close. Marie, you've got some availability afterwards if people wanted to have one-on-one chat with you.
Yeah, I would love to catch the CEO panel, but that starts at 2:15.
2:15.
So I'm available till 2:15.
Okay. In the meantime, we need to clear out, so perhaps in the media room, and hand over to Max, who's going to give a short presentation on China and then take some questions on what's happening in North Asia.
Awesome. Way to go, Max.